Welcome to another episode of News You Can Use. I'm Lisa and we are here to dig through the personal finance news headlines from last week to just try and see how they impact your money life. Okay, we can't avoid the biggest news of last week, so we're going to start with it. It's the LIC IPO. It's finally coming on the 4th of May and the company is expected to list on the 17th of May. There is so much noise around it, so many headlines. You pick and choose the headline you want. LIC IPO is a big deal. It's going to be the biggest for the Indian capital markets. LIC for the last, I think around 6 decades, it's government owned, most popular life insurance company in India. And, of course, there's a lot to be excited about. However, let's see what all the noise is for. Now, LIC wanted to come out with an IPO slightly, a month or so back, but it didn't happen. And now they're kind of rushing through it because if they don't get it done by a certain date in May, then they'll have to delay it even further and add more details to the prospectus, which can take even more time. So that's happening. The price band that they have notified is 902 rupees to 949 rupees per share. Now, experts are saying that this kind of pricing for the IPO means that the valuation is lower than what was estimated earlier. What that means for you is that in simple terms, you're getting the stock at a discount. In fact, for policyholders, there's a further discount of 60 rupees on this band. So if you are an LIC policyholder, you can actually apply for the IPO at an even lower price. 10% of the IPO is reserved for policyholders, so there is no telling whether you will get the allotment or not. However, you can apply for it cheaper. Retail investors can apply for it at a price which is 45 rupees lower as well. However, remember that if the price is lower, then there is perhaps some reason. Now, if you look at the valuation right now, according to experts, it's around 1.1 times the embedded value of the company. Don't worry about what embedded value means, etc. But let's compare that with other life insurance companies which are also listed in the capital markets. And which are basically the private life insurance companies. And there the embedded value calculation kind of ranges from 2.5 times to 4 times or so. And obviously 1.1 is at a discount, but there could be reasons behind it, right? LIC is losing market share. There is an issue with the kind of business mix it has, too much reliance on single premium policies. It has been a state-owned life insurance company for several years, and that comes with its own baggage. A lot of things will be known, will be understood better only after the company lists and all its numbers, all its finances, everything is made public. You have the choice, of course, to invest in the IPO at the discount. 35% is reserved for retail investors. Whether you get allotment or not will really depend on how oversubscribed the issue is from policyholder side and from retail investor side. Also, you could wait till the company lists in stock markets. Wait till you have access to even more information, till you have access to the sentiment around the stock, till you have access to what others are expecting and what kind of future earnings are getting projected. And maybe then after 6-8 months of listing, decide whether you want to buy the share or not. These are 2 options. Think which one you want to go for. Okay, moving on. The next thing is, of course, there was another big news through the week about Indonesia banning palm oil exports. Now, how does that impact India? Because India imports about 60% of its palm oil requirement. And believe me, palm oil is in all kinds of packaged food which we buy. So it directly impacts really your grocery bill, which is expected to go up. However, the silver lining here is that it's been clarified that Indonesia is banning only the export of refined palm oil, whereas I think India imports the crude palm oil, the unrefined version of it. So there could still be some respite for some time. But it's not looking good. If crude palm oil exports are also banned, then definitely you're looking at price hikes across your packaged food that you're buying, biscuits, chips, or all kinds of other, kind of preserved foods that you buy from the stores. So you're looking at your grocery bill going up, basically. Okay, so this is an interesting news and you may have missed it because of the way the headline is. Auto debit bounce rates for loan EMIs inch up in March. According to this news piece, retail loan, the bounce rate is basically how many of those EMI checks are bouncing, when EMIs are automated by the bank or, in check form. So how many of those are bouncing and not going through in that particular month? So in March, I think it was the rates were around 22%, which is not as high as, pre-COVID what it was, but definitely it has increased. So this is something to watch out for. We have spoken about headlines around loans before. There was headlines around how personal loans are going up for women borrowers and things like that. And we've always said that be a bit careful, because retail loans are basically personal loans and your consumer durable loans. And if you're taking a loan, it means that perhaps you can't afford what you're buying. Last week or week before last, we spoke about the GDP estimates being reduced, which means that there will be economic stress in the system, which could translate to economic stress for you. So be very, very careful. This will not impact you directly, this news headlines, but it's a sign of things that are happening now. And basically, there is stress in terms of earnings. There is stress on individuals who are spending. Retail loans are really for your immediate spends. So if your immediate spends are going to be under stress and your ability to repay those loans is under stress, then there is an issue. So just rein in that expenditure for some time till things get better. Another thing is hotel booking rates continue to rise as COVID lurks beneath. So COVID fears are resurfacing, obviously, and we have to wait and watch how that pans out. But people are traveling with a vengeance again because they want to get out there. They've had 2 years of nothing and everybody really wants to get out there. So hotel rates are sky high. I've tried booking and some of those prices are really quite unreasonable. Again, this is linking in with what we just spoke about. A lot of people, when they see such rates and they're not able to control their emotion around travel, will take a loan to be able to afford the travel. So these headlines are all showing that expenditures are going up, but people's ability to repay when they borrow to kind of pay for that expense is under stress. You don't want to be in that position as well. So keep a watch for these kind of things where you're seeing that, okay, everything's getting more expensive. When you come to that realization that hotel bookings are more expensive, flights are more expensive, groceries are more expensive, it's time not to spend more on a loan. It's time to rein it in and save till this period kind of calms down. Okay, this is I'm coming to a market headline because we always do one or two of those. Nifty may again test support at 16,800. IT weakness could continue. Such a vague headline. It makes no sense, really. Yes, Nifty, this was maybe on Monday or Tuesday of last week that the headline came. The Nifty is above 17,000 right now. I'm not sure about the exact level, but it's definitely not testing that support level, which this headline spoke about. IT sector does have some weakness, but nothing really to write home about, honestly. So, these headlines are so fickle. They can go one way or another. You don't know. If you're a long-term investor, best to avoid. Okay, this one is interesting. HDFC Bank plans car loan disbursal in 30 minutes in online push. So this is obviously a business strategy from HDFC where they are going to, try and disburse those car loans really, really quick. And they plan to then trickle it down to two-wheeler loans as well. Again, I would say tread carefully because, if this is a goal for them, they will have a lot of push on it, a lot of nudge on it. Take that car loan only if you really need to. If you don't, stay away from it. Okay, this is some good news. RBI tightens credit debit card rules to fine banks for unsolicited issuance. Who here has not been bothered by unsolicited calls, firstly, and secondly, suddenly you find a card in your name which you never asked for, you never applied for. So now RBI is putting the onus and putting the penalties and fines on the banks for having done all this kind of wrong selling, because you don't want to end up with a card that you never really wanted. And you'll end up paying those annual fees, or you'll end up going through a lot of trouble to cancel the card. So what RBI is saying is that it is up to the bank to confirm that the customer who they have issued the card to is going to activate it, and all of that happens through an OTP to your mobile number. So if you don't do it within 30 days, I think that's what the article says, within 30 days, if you've not activated the card through this kind of OTP or communication from the bank, then that card is to be dissolved. And there is no onus on you to go and cancel it. The bank must do it themselves, because you never ordered that card, you never wanted that card, it was unsolicited. This is good news, definitely. Okay, another stock market news, and RIL is in spotlight. It hits a new high, likely to outperform in near term. Reliance Industries stock has actually outperformed. It's done really well. Again, headlines like these give the sense that it could continue to do well. It could, or it may not. And it's really not a headline that you should follow to go and buy the stock. Something for information, sure, go through it, but don't take it as a signal to buy the stock. All right, that's it from me. Looking forward to the LIC IPO, which is next week, and then we can kind of break it down and talk about it in the next episode. Thank you for watching.